Welcome everyone, and Selamat Hari Raya Idul Fitri. Thanks for joining. It's cool to see another webinar. That's really great. Obviously, the topic is quite an important one, and who does not want to save taxes? So the topic, tax considerations during troubled times. Thank you very much for our member, Kenyo, for organizing this. He's partner at the Baker Tilly Malaysia, an audit and insurance, tax and financial advisory company, but I'll leave the introduction and more details of the company to Kenny later. The webinar will be around 45 minutes, so please note your questions down, either for you personally to ask later or write it in the chat so I can read it later for the Q&A. So the Q&A we will do right after the 45 minutes presentation. And with that, I hand over to Kenny.
Good evening, everyone. My fellow BOC members. It's a bit awkward wearing like this, right? I'd rather prefer our golf attire. But jokes aside, I'm extremely happy and proud to be part of this Biz On Course network, a chance to get to know all of you, as well as given the opportunity to host a webinar with a couple of my colleagues to bring you some of the tips and hopefully some opportunities that you may explore on how to save some tax monies in these times of difficulty for a lot of our businesses. Today, I have 3 tax experts with me, which will share their expertise in their various areas of professional. I have Johan Francis, Mr. Murugan, as well as Sandra Saw, which they will come on later to give you a briefing on what are the potential opportunities that you may have. So from there, hopefully you will be able to pick up some information or some knowledge. And if you have any further questions, arising from these opportunities, we'll be more than happy to assist you or your businesses or your accountants to explore what are the possible tax savings that you could have. Maybe just a little background on my firm, Baker Tilly Malaysia. Baker Tilly Malaysia was first established in 1978 by our founders, Mr. Monteiro, as well as Datuk Heng. So this year is our 43rd anniversary. At the moment, we are 6th largest in Malaysia. We have 7 offices across Malaysia, of course being HQ, being in KL. Our office is headquartered at Bangsar South, or more popularly known as Kampung Kerinci now. We also have a couple of large regional offices in Penang and Johor Bahru, and some other smaller regional offices in Batu Pahat. What else? And we have an overseas subsidiary as well, overseas branch in Cambodia, which we operate off Phnom Penh. In Malaysia, we have 50 partners and directors operating across all the service lines, and we are equipped with 800 professional staff. Our services offered by Baker Tilly Malaysia includes audit and assurance, which is our bread and butter, taxation, which includes tax compliance, tax advisory, SST, and any audit or investigation assistance, we'll be able to assist in that as well. In our advisory arm, we have corporate recovery and restructuring, which is one of our strongest area, as well as forensic audit and corporate advisory. Just a little thing that I actually mentioned during one of our meetings as well. In 2020, we actually were reporting accountant for 6 out of the 19 listings in 2020. That's a very big achievement that we had. We have 1/3 of the market share, so we are extremely proud of that. In 2021, we're aiming to have, at the moment, we already have 2 clients that is approved for listing, and we're looking forward to more hitting the gong this year. On top of that, we also have internal audit and risk advisory services, global business solutions, which covers your accounting issues, your finance issues or admin issues or any business solutions. We do have a specialized department that assists your business in terms of that. Technical consulting services, this includes digital transformation, cybersecurity, IT process improvements. We have a subsidiary that assists us in that as well. We are part of a Baker Tilly International Network. This is a global network of independent accounting and business advisory firms, where we exist in 148 territories across the world, 740 offices, revenue of $4 billion in 2020 with 37,000 people. What does it mean by being part of a Baker Tilly, being part of an international network is we're able to harness and share knowledge among all the network members across the world, and if there's something that a business would like to expand into different regions in the world, we are able to assist. We have our counterparts across the world that is able to assist us. Closer to us in the Southeast Asia region, we have Baker Tilly network members in all the countries in Southeast Asia, only with the exception of Brunei and Laos. Okay. But all the other countries, we do have a fellow member there. Without further ado, I would like to thank all of you for taking your time to attend this webinar, and hopefully, like I said, bring back a tip or two, or create some questions in your mind, which you then can further on, proceed to come and seek for further clarification or further assistance. We'll be more than happy to help you. So allow me to bring on my first presenter, Mr. Johan. Thank you.
Thank you so much, Kenny. That was a very interesting. That was a very interesting introduction. Good afternoon, everyone. My name is Johan. I'm going to take you through something that's boring yet interesting at the same time. Boring because taxes are really quite boring, but it's interesting because if you listen clearly to what I say today, there are going to be some opportunities for you to save your taxes. As I mentioned earlier, taxes are always boring. And just to remind everyone, if you haven't filed your personal tax return yet, your Form BE, assuming you don't have a business income, the due date is 15th of May. You've got 3 days from today to file it. So I hope you're going to get into it soon. Okay, so today I'm going to go through a few things. I'm going to start off with some personal income tax, corporate income tax, some tax incentives that may be interest to SMEs that have been provided to the government during this COVID period, some simple things about real property gains tax, stamp duties, and finally I'll be talking a bit about tax administration. As you're aware now, we're going through our COVID outbreak, and our government has already said they're a bit short of cash. So the easiest way to make cash is to increase taxes. But that being said, they also know that everyone is going through troubled times now. So they have had a lot of incentives for people to take advantage of, especially for SMEs. I think you all have heard every time our Prime Minister comes on board and gives his speeches, there's something either like a Penjana, Prihatin. So I have taken a few of them, which I think are fairly interesting, and I'll go through them with you over the course of the next half an hour or slightly more than that. But there's one thing I'd like to wish everyone, please don't fall asleep, because as I said earlier, taxes are quite boring. So I'll start off with personal income taxes. As I mentioned earlier, if you've got an employment income, you have to file your tax returns by the 15th of May. If you've got a business income, it's in the 15th of July. So I'm going to tell you about some of the changes that are in effect from 2021, not this year. This year, you will be filing your tax returns for YA 2020. But you see, the good thing about how I'll be explaining it today is I'm going to talk about the current and the proposed. So when you look at this situation, you will know that the current, it's like a refresher. Have you done your necessary claims and all if you're going to file your tax returns? And you can also plan for the future, because I'm going to talk about what's going to happen for you in YA 2021. Okay, so the most important thing that happened recently is you're going to have a slightly lower tax rate. The tax rate in the bracket of between 50,000 to 70,000 per annum, there's a reduction of 1%. So when this happens, the rest of us who earn more than that will automatically get a savings of RM200. Okay, I'm sure everyone was excited when I said got tax savings, but then when it's RM200, I think everyone's also quite bored. But then again, 200 is of course better than nothing at all. So moving forward, next year onwards, if you earn more than 70,000, 50 to 70,000, you will have tax savings of 200 on your taxes. So that's the first thing that's quite important and everyone needs to be aware of. So if you're going to, let's say, promote your staff or something, remember 50 to 70,000, then he already starts getting his savings there. So when you give your staff the increment and all that, take all these factors into account. Okay, the next thing I'm going to talk about is the personal relief. Once again, as I say, current position means it's applicable for the tax returns you may be filing soon, that means YA 2020. Proposed will be for next year onwards. So prior to the recent budget, if you have any medical treatment, special needs or parental care expenses, you can claim a relief of 5,000 ringgit. That's this year. Next year onwards, you can claim a relief of up to 8,000. So you see, with the COVID in place currently, what the government is trying to do is they're going to give you more reliefs and all that to help you out a little. So in theory, with these new reliefs and all that, you will have to pay a slightly lesser tax. So effective from 2021, if you have to go through any medical treatment, special needs or parental care expenses, you can have a relief of 8,000. That's up by 3,000, which is quite good. Okay, another thing that they have changed is also if you currently have medical expenses for serious diseases for yourself, your spouse or your child, or you're undergoing fertility treatment for those of us who are having some challenges getting our next in line to come into place, or you go and take a full medical checkup, the government has increased the previous cap of 6,000 to currently 8,000. So the scope of relief is expanded to include vaccination expenses up to 1,000. And the good news is for the COVID-19 vaccine, we can claim this for the relief. So I don't know about you guys, but for me, until today, I've done about 4 COVID tests already. And then like one of them, most of them so far are paid for by my company, but one I forgot to put in my claim. So I think I know where this relief is going to go. So COVID, for those of y'all who are doing your tests fairly regularly like me, unfortunately, make sure you know that you can claim an additional relief for this. So another thing that has come about is also for the annual full medical checkup. Previously, we can claim 500, but as we're all getting a bit older and all that nowadays, 500 also can't get much done. So the government has increased the relief to 1,000 ringgit effective from 2021. Once again, I remind you, if this year you're doing your taxes, you must see that your medical checkup, 500 is the limit. Okay, another thing that has changed is an individual with a disabled husband or wife or a disabled spouse, currently you have a tax relief of 3,500 ringgit. Starting from 2021, they have increased this amount to 5,000 ringgit. The last thing that has changed is the contribution to the private retirement scheme. As you all are aware, sometimes our banks and all that, they have the new private retirement scheme to supplement you for your retirement. This is also something we must be mindful and think about, since our government seems to be taking out EPF money and letting us take out all our EPF money. If you want, better contribute to private retirement schemes. Then at least you know when we retire, we'll have some extra money. So for year of assessment 2022 to 2025, we are still going to have the 3,000 relief for contribution to your PRS. So that's something we need to be aware of. So if you want to contribute to your PRS, don't forget when you file your tax return, in your tax return form under the EPF box, quite near there, you'll have this thing about PRS. You can claim all the way until 2025. Okay, other things that have changed. A few years ago, there was something called the lifestyle expense, where it includes reading materials, including e-books, newspaper, computers, smartphones, tablets, internet subscription, sports equipment, and gymnasium membership. Prior to this, that means this year all, we can claim RM 2,500. So the government has increased this to 3,000 for next year. And included in the additional 500 is the cost for purchasing sports equipment, rental fees for sports facilities, and participation in competitions. So I think our government wants us to be a bit more competitive, take more part in fishing competition or something like that. Also, they want us to, go to visit our wonderful stadiums, support our football teams and all that. So got extra 500 relief there. Then again, with COVID, I don't think we're going to go to any sports facilities. Every year got MCO, every month got MCO, we're all just sitting at home. Okay, another thing that comes about is a special tax relief for the purchase of mobile phones, computers and tablets, 2,500. This is a special one. So last year, as in 2020, you had purchased a new mobile phone, computer or tablet, you get a tax rebate of 2,500. This was because, a lot of us started to work from home. A lot of children started to learn from home. So that being said, you got an extra relief above what was previously offered. So starting from, this thing will go on until 2021. So if this year you buy a new phone for your kid or new laptop for your kid, can also still claim as a relief next year. So like me, I bought a new phone this year, I will claim this relief. And now I've got to see whether I want to buy a new laptop as well. But 2,500, the phone itself took up everything. Another thing that's changed is the Scheme Simpanan Pendidikan Nasional, SSPN. So for the SSPN, prior to this, you can claim a relief of up to 8,000 for the amount you contributed. And this is only for year of assessment 2019 and year of assessment 2020. The government has extended this all the way until year of assessment 2022. Just to remind you guys, this year, if you're filing your taxes now, is for year of assessment 2020, although we are in calendar year 2021. The final thing I want to speak of is our government wants us to be more educated. So all the expenses you incur for your educational fees, such as you're doing a new certificate, a new diploma, bachelor's degree or master's doctorate, they want us to upskill ourselves. So now we have this education fee relief of 5,000. They have also encouraged us to do more upskilling. So the fees covers things such as self-advancement courses, things recognized by the HRDF. But this is limited to RM 1,000 for each year of assessment starting from 2021. I think over the course of last year, during the first MCO, all of us were sitting at home. There are a lot of people enrolled on a lot of these online courses and all that. So this is to help you out, at least, get some relief for some of these courses you have gone through. And this will be applicable all the way until year of assessment 2022. Okay, another good thing that the government has come about is your childcare fees. The IRB has the government has given a relief of 2,000 prior to this, and for last year and this year, they have increased this to 3,000. But the thing, you have to make sure that the kindergarten or the childcare center is registered with the social welfare under the Childcare Act. So must be an authorized service provider. I think we always read the news, got all this toughest school and all that, then the kids get abused, then most of the time they're unlicensed. So if you want to claim this relief, make sure it is a licensed place under the Director General of Social Welfare. And the one that made me the happiest last year, at least until March, fortunately I went to a holiday in February last year, my last holiday, domestic tourism will get a 1,000 ringgit relief. So this you have to be at accommodation at premises registered with Tourism Malaysia or entrance fees to tourist attractions. So unless you went before March last year, March the 18th, or somewhere around December, November, we had all of us traveling all over the country again. You must remember, keep all your hotel receipts, keep all your entry fee receipts and all that. So this 1,000 relief is applicable for last year, and it's also going to be applicable for 2021. So let's say, now we all stuck in KL, tomorrow you want to go staycation in Doubletree or something like that. Then you keep your receipt, you can claim this for your tax relief next year. So make sure you spend at least the 1,000, maximize your tax relief so you always pay less taxes. One thing about all these reliefs, you must keep them all these receipts in place for 5 years. Because when IRB audits you, they can come back 5 years and ask you to produce all these receipts. Now, if you're like me, I'm a very careless guy, everything I put here, put there and all that. If by any chance I get audited, I think I'm going to have to pay a lot of extra taxes. So file everything, keep it properly for the next 5 years, or get a woman to do it. Normally women are very particular and all this, they can keep everything nicely. Okay, now this is something that came about out of a lot of people who are losing their jobs due to COVID this year. So if you have a compensation for the loss of employment, IRB, you will have to pay a tax for the gratuity or the amount you're getting. So let's say if currently, if you're ill or not well, then you can claim an exemption from taxes for the whole of your compensation, the tax you're supposed to pay for your compensation. Okay, now the IRB also has an exemption of 10,000 for each completed year of service with the same employer or companies within the same group. So you see, each year of service, same employer or companies within the same group. So now, I think because of COVID, a lot of people have also lost their jobs and all that. So this exemption limit has been increased to 20,000 for each year of assessment. This is to help people who lost their jobs, so they don't have to pay too much money for taxes. They can use this money for spending, sustenance until they find a new job and all that. This will be effective for years of assessment 2020 and 2021 only. That being said, let's say if you had to let some of your people go this year, and then just let them know that they can have an income tax exemption, because sometimes people don't know all this. When we fill up our tax returns, we don't have everything that's readily available, although the system is quite good, but you need to be aware of all these kind of things. Okay, now I'm going to go into my second section. That's about corporate income taxes. Just a refresher, we need to file our corporate income tax around August or September, depending on your year end. So if you're a December year end, you need to file your corporate taxes by 15th of September. I hope your tax agents or your accounts team is already looking into your corporate income taxes. Okay, one thing we need to be aware of before I go into my slides about corporate income tax is your taxes helps run the government. Okay, I don't know if any one of you has registered for the AstraZeneca vaccine. I hope you have. But the second after the registrations began, I remember Kyrie coming out and saying that all the rich countries have already bought the vaccines earlier than us. So when we look at the rich countries, I'm going to give two examples here, Singapore and Hong Kong. For example, my brother is in Singapore. He's in his young 40s and he's already got vaccinated, both shots. I, on the other hand, am still waiting patiently and trying to take part in some lucky draw or, clicking on 12 o'clock. So that's the thing. Singapore is one of the lowest tax rates in the world, and yet they are known as a wealthy region. And they use their tax money to buy the vaccines faster than us. So paying the right amount of taxes is very important. Just that in Malaysia, sometimes we don't know where the money seems to be going. I hope there are no politicians or someone here listening, but I think we can acknowledge that how can a country with lower tax get the vaccines faster than us? And we say, richer countries are buying the vaccines. So I'm going to now go and talk about corporate income tax, some of the incentives that have come into place and how the government is trying to help us go through these challenging COVID times. Okay? So my first slide is something that's proposed under the Bencana scheme. As I mentioned earlier, this year every time our Prime Minister comes on board, he proposes spending a few $100 billion, got Bencana, something, Prihatin and all that. So Bencana, now he's giving an income tax rebate of up to 20,000, equivalent to the capital expenditure and operating expenditure incurred for each year of assessment for 3 consecutive years of assessments from the commencement of operation. So you get an extra rebate, not relief, rebate. Rebate is good because it knocks off at the right amount, at the right place. It's a rebate. So for CAPEX and OPEX, for 3 years from the commencement of operations. But our country really like to make things complicated a bit. So there are conditions that you need to fulfill. There are 3 main conditions. The first one, for SMEs, which is who most of us are here today, and most of you guys are as well. You must be a tax resident and incorporated in Malaysia. Your paid up capital contribution should not be more than 2.5 million, and your gross business income should not be more than 50 million. And you commence operation after the 1st of July 2020 all the way until the 31st of December 2021. So when you meet all these conditions, you can claim this tax rebate. So remember, must meet all 3 conditions, not 1 out of 3 or 2 out of 3. When you maximize, you can use all this, you can meet all these 3 conditions, you can maximize it, and you can get a tax rebate for 3 consecutive years of assessment. This will be effective from year of assessment 2021. Okay, there's also a good thing, an extension for the deduction of employment for senior citizens, ex-convicts, paroles, supervised persons, and ex-drug dependents. Okay, I think the government has always tried to help the people I mentioned earlier to come back to work. Sometimes, you know, when we retire also, we still can work. Like my mom still talks a lot. I wish she was still working, but then she stays at home and talks to me every day. So some of y'all also will know some senior citizens who can work. That being said, there are also some senior citizens who we wish they will retire, but they don't want. So life is such. So the government gives a deduction to employers who hire senior citizens, ex-convicts, parolees, supervised persons, and drug dependents. So you get an additional tax deduction if you fulfill the following conditions. The employee is employed on a full-time basis. The monthly remuneration does not exceed 4,000. The employer and the employee are not in the same person. That means you cannot be a senior person and then go and try to claim this relief. And the employer is not a relative of the employee. So I think the government have put in quite clear rules here. So this incentive was supposed to be in place for year of assessment 2019 and 2020. Now they've extended it from another 5 years, all the way until year of assessment 2025. So when you're looking to hire people, you can always look at this again, and you can get an additional deduction for their remuneration. Okay, now I'm going to talk about some of the tax incentives that are available to us in the Penjana, Prihatin and all that. Some are applicable to SMEs, so please listen quite carefully. Okay, the first one, if you are manufacturing pharmaceutical products, including vaccines. See, sometimes I don't understand how did pharmaceutical products include vaccines. I was thinking beauty and all that. I don't know, like in Malaysia, you know, there are 2 companies that are helping in the vaccine. If you're going to get the Sinovac vaccine fairly soon, it's coming out from the Pharmaniaga group. And then if you're going to get the Sputnik vaccine, it's coming out from the CCM group. So these are the 2 vaccine companies helping out with the vaccine companies in Malaysia for the COVID vaccine. But this is not only for COVID, this I think includes all vaccines. So there's an income tax exemption or investment tax allowance available to manufacturers of pharmaceutical products. First things first, always a condition, must be approved by MIDA. Second thing, if you're a Bionexus status company, also must be approved by the Malaysian Bioeconomy Development Corporation. Okay, I never knew such a place existed. Now we all learn together. Okay, why are they doing all this? They want to encourage manufacturers of pharmaceutical products to manufacture more vaccine, and so that our country can develop vaccines faster. So you will get an incentive of an income tax rate of 0% to 10% for the first 10 years. That means you don't necessarily have to pay taxes. That's always very good. And that's 10 years. The next 10 years, you only pay an income tax rate of 10%. So you see, for example, although this example might sound a bit funny, India currently is going through a very bad COVID outbreak. But then, do you know the number of people vaccinated in India probably is more than the number of people in all of Malaysia? So that's why, because India, they can manufacture the vaccines very fast. A lot of the AstraZeneca vaccines are actually coming from India, although our first batch is coming from South Korea. Maybe after I take it, then I'll become like girls' generation or something like that. But our one coming from South Korea, if you can manufacture all these vaccines quickly, it'll be very good for the country. So the government wants us to have more facilities can do all this, and they are giving you a tax rate, very low tax rate if you can fulfill the necessary requirements. So this is effective for applications received by MIDA from November 2020 to 31st December 2022. So let's see how. I mean, if you're in a manufacturing, you are in the pharmaceutical, you see if you can do any vaccine, not necessarily COVID-19, any vaccine, then you can save a lot of taxes. Okay, another thing that's come about is the review of group relief. As you are aware, currently if you have group relief, you can surrender or make claims based on the share capital, or if you're 70% owned within the same group. So now the government has changed the law slightly. They want companies who want to claim this group relief, whether you're surrendering or claiming, to be a resident and incorporated in Malaysia. I will now show you a simple example. Then from here you can see. So if you see this group, ABC Sdn Bhd holds 100% of XYZ Sdn Bhd, and ABC and XYZ hold 80% and 20% respectively of Nutri Sdn Bhd. So let's say this person is surrendering the group relief. ABC and XYZ also own 100% of Hello Play Limited, and Hello Play Limited owns 100% of Grains Sdn Bhd. So you see, just because Hello Play Limited is not a Malaysian company, you cannot use group relief already between Nutri Sdn Bhd and Grains Sdn Bhd. Because Hello Play Limited is not a Malaysian company, so and the income tax is not allowing you to use group relief anymore. So when you look at your current structure, if there's although 100% held by someone in Hong Kong or something like that, then you can't claim group relief. You have to relook. Prior to this, it was quite okay. Okay, now I'm going to go to my next slide. Okay, extension of reinvestment allowance. This is nothing new. Prior to this, the government has given a special RA for companies that have claimed reinvestment allowance for 15 consecutive years of assessment. So it was effective for year of assessment 2016 to 2018. So this special RA, now the income tax has also helped us out. They're giving us for year of assessment 2020 to year of assessment 2022. So it's just good lah. Another extra reinvestment allowance, special one, this one. Okay, extension of tax incentives for export of private healthcare. If currently you are in the private healthcare and you are doing export of private healthcare, you have an income tax exemption equivalent to 100% of the value of the increase in exports of services, and it can be set off from 70% of the statutory income. Current income tax are planning to stretch this incentive, extend it from to year of assessment 2021 and year of assessment 2022. Okay, now I'm going to go into real property gains tax. This is what happens when you sell your property. There's been a slight change. This one's quite straightforward. Let me go straight into it. Currently, if the disposer is a company incorporated in Malaysia or a trustee of a trust, RPGT is applicable on the following rates. So 30%, 20%, 15%, and 10%, depending how long you dispose it after you hold it. These rates are effective from the 1st of January 2019. Now the RPGT rate for companies also includes associations. So you have an association and then you want to sell off, you have to use the corporate rate for the RPGT. This is effective from 1st of January 2021. Okay, I'm also going to go through another boring thing, stamp duty. So let me go through this straight away. Okay, when it comes to stamp duty, this will be very applicable for all you rich men out there. Maybe you want to buy new property and all that, or you want to buy property for your children. So there's a good time to buy. The government is giving a lot of stamp duty incentives. For most of y'all here, y'all will be like me. When we bought our houses, the stamp duty was very, very painful. So let's see. Currently, if you are going to buy a house, there's a stamp duty exemption for the instrument of transfer. So there's a full exemption on the instrument of transfer if your value of your first residential home is up to 300,000. The applicable period is from 1st of January 2019 to the 31st of December 2020. There's also another exemption of up to, on the first 300,000, this is for houses that are between 300 to 500,000, you also get an exemption which is slightly lower. Now the government has changed, they're going to give a full exemption for the instrument of transfer for the purchase of the first residential home up to 500,000. So if you buy a house 500,000 and below, and your SPA is executed between the 1st of January 2021 to the 31st of December 2025, long time, 4 years, then you don't have to pay stamp duty. So this is to help the younger people, the lower income group, to own their own or their first houses. It's applicable. So the younger people, we know, a good time for them to buy a house. Okay, now I'm going to go to indirect taxes. There are some changes and some exemptions from service taxes. This is something that might impact all of us as a whole. As you know, the government relies a lot on indirect taxes to pay us the necessary. Okay, so if you have a hotel, so service tax would be exempt from the period of 1st March 2020 to the 31st of December 2021. And you know, tourism tax that had been in place slightly earlier, it's also exempted for the period from 1st of July 2020 to the 31st of December 2021. So if you're a hotel owner, make sure you know that you don't have to collect service tax for this period and you don't have to pay service tax. That being said, I think most hotels right now occupy at a very minimal occupancy. And I don't know whether this service tax exemption is big enough to make an impact for them, as so many hotels are going through troubles and some of them can't even fill up their hotels. Okay, but this is still good. So if you're in the tourism industry, you have a service tax exemption and a tourism tax exemption all the way until the end of this year. Okay, now I'm going to cover some of the additional incentives that were provided in the Prihatin or Penjana or Permakasa package given by the government. So if you look at it, see whether it's applicable to you guys. It's something that's going to help you when you're filing your taxes, and you can claim these incentives that will help out a lot. Okay, all right, the first thing we're going to look at is if you are LLP, Limited Liability Partnership, previously you can fill up the tax return using your manual way or the e-filing way. So starting from next year of assessment 2021, next year, you have to submit your tax return through e-filing. I think what the government here is trying to encourage is no one use the manual forms anymore. Even personal tax and corporate tax, I don't know if we still have the manual forms, but they want everything to go through e-filing, easier for them. Big data, they can also find out issues and audit you faster because everything's online. So they're trying to encourage everyone to use e-filing moving forward. So if you're LLP, start to use e-filing starting from 2021. No more manual form. Okay, prior to this year, if you happen to start a new job or leave your job, you have to know, as an employer, you need to notify the IRB within 30 days. But one thing is, they have found out that sometimes people do die. So suddenly they've realized that if the person is dead, you also need to notify the IRB within 30 days. This I find quite amusing because, I don't know, people have been dying all our lives, but now they've also told employers that if someone dies, within 30 days, you've got to tell the tax authorities. Okay, not 30 days from that, but 30 days from being informed. And this would be effective 1st of January 2021. So you need to file the CP21 or CP22, whichever is necessary, for people who start employment, people who leave employment, and people who die. Okay. There's going to be a new special tax deduction for rental reduction. This is really, really very good for all of us SMEs. Please take note of what I'm going to say. So for this particular year under PERMI, there will be a special tax deduction equivalent to the amount of rental reduction given to business premises owners who reduce at least 30% of your original rental rate to business premises rented to SME or non-SME tenants. The applicable period for the special deduction for SME tenants would be from April 2020 to June 2021. That will be end of next month. For non-SME tenants from January 2021 to June 2021. So once again, this rental reduction is applicable for SME or non-SME. But if you want to claim under the SME, because it's a much longer period, as always, there are conditions that you need to fulfill. Okay, the first thing you must see is your supporting documents need to be kept by the landlord, such as your stamped tenancy agreement. Make sure it's stamped. You need your rental income statement. You, of course, need to have your SME status certificate for SME tenants, and also details of the tenant, rental details, and rental occupancy details. One thing we need to be mindful, if you have not been declaring your taxes for rental and all that, maybe you better not go and claim this special deduction, because it could be a trap also. Then IRB will know where your rental income is coming from. But if you have been, and you are giving a discount to people during these troubled times, it's good that you claim this special tax deduction. Okay, another good exemption we have under the Penjana package is the real property gains tax exemption. So if you're a Malaysian citizen, an individual, you are exempted from paying RPGT. When you sell your house, you have to pay RPGT, and if you sell up to 3 units during the period of 1st June 2020 to 31st December 2021, you are exempted from tax exemption. As you are aware, starting a couple of years ago, irrespective how long you have held the house, if you're individual and you sell it, you still have to pay an RPGT. So this exemption is very, very welcome to all of us. It's not applicable for the acquisition by the way of transfer between spouses or gift between spouses, parents and children. So that being said, if you want to sell a house and you can get a good price, no RPGT, no need to pay tax for this year. Another exemption is the instrument of transfer under the proposed Penjana plan. Stamp duty exemption on the purchase of residential property under the Home Ownership Campaign 2020-21. So there will be a full stamp duty remission on the instrument of transfer for properties for the first 1 million, and a reduced stamp duty rate of 3% rather than the usual 4% on the transfer of residential properties on the balance of 1 million to 2.5 million. So this is quite good. 1% of 2 million also is a lot of money already. Here, if you're planning to sell a house or buy a house, make sure it is under the Home Ownership Campaign first, and then you can get this special stamp duty exemption. Okay, another stamp duty exemption on the instruments of securing loan. If your house is also under the Home Ownership Campaign, you get a full stamp duty exemption on the loan agreement for residential properties. So if you take all these into place, actually there's quite a lot of savings if you buy houses this year. I think all of us know there's an overhang in the property market, and something very scary is recently new houses have gone up almost 10 to 15%. I really thought house prices were very, very high before this, and now it's even going up higher. So with all this, it's going to help people own houses and hopefully generate and clear off some of the property overhang. Okay, another stamp duty exemption that we have under the Penjana is also on the purchase of residential property for the period of 1st of January 2020 to the 31st of May 2021, that means until this month. If the property is priced between 300,000 to 2.5 million, it must be a sale from a property developer registered under REDA or SHREDA or SHIDA, and must be purchased by a Malaysian citizen. The purchase price is subject to at least a 10% discount. Then you can have a stamp duty exemption. Once again, as I said earlier, you always need to fulfill all the conditions before you can have this exemption. Okay, and the last one, under Permakasa, tax incentives for the tourism industry. So this one is the authorities are realizing that the tourism industry is really badly hit during this COVID. We all cannot merentas daerah, tak boleh merentas anything. So most of the hotels and all are suffering, including cinemas and spas. So you have a deferment of your tax installment payment from 1st of April to 31st of December 2021 for companies in the tourism industry and selected industries such as cinemas and spas. So this is something that's quite good for you if you're in any of those particular industries. And the last but not least, a wage subsidy program is still in place. A further 3 months has been given, April to June 2021. Targeted approach on the tourism sector, retail sector and businesses that were closed during the MCO. So this one, you have the wage subsidy program. It is being extended until June 2021. Now that we are under another MCO, who knows, might be extended once again. Okay, so I hope I have not bored you enough with all my tax talk. But I'm going to now go on to my question and answer session. I'm really looking forward to all the questions that you guys have for us. It doesn't have to be anything that I've mentioned in the slide. It can be anything in general about taxes. We'll try our best to answer what we can. My colleagues, Mr. Muru, my technical director, and my sales tax expert, service tax expert, Ms. Sandra, will be joining me. So let me go and join them, and you can please, any questions you want about taxes, we will try our best to answer them. Okay, thank you so much, and see you in a few seconds.
was a very good example today. We learned quite a lot. So anyone wants to do this or something similar, please let me know so we can set up and organize that. Usually we do it in the Wednesday, in the middle Wednesday of the month, or in other words, the second 2 weeks before the golfing event. Please just text me when you feel like you want to do something like that today. Maybe last words from Daniel.
Well, I just thank you for coming. In future, you can let your fellow members know that this is going to be a great session, because some of them don't know, right? And I believe that with more of this going on, members will be more well informed. Then moving forward, you can plan properly. So thank you, everybody, for making this happen. Thanks, Patrick, for being the host of this event too.
Thanks, guys.
Thank you, guys.